All right, let's jump right in. We're going to pull back the curtain on some of those big financial ideas that honestly control so much of our lives, from that very first paycheck all the way to building our future wealth. It's time to make it all make sense.
You know the feeling, right? We've all been there. You bust your butt all month, you see that beautiful big number on your pay stub, and then reality smacks you in the face. The number that actually hits your bank account? Yeah, it's way, way smaller. It's so frustrating.
So, where did it go? It seriously feels like it just vanished, poof, into thin air. But here's the thing, it didn't. It went to some very specific places, and figuring out where, well, that's the absolute first step to getting a handle on your money.
Okay, so let's start at square one. The second you earn that money, what happens next?
Well, a huge piece of that disappearing act is taxes. And what are they, really? Think of it like this. They're the subscription fee for living in a civilized society. That money goes to building roads, funding schools, making sure the taco truck on the corner is up to code, all the stuff we use every single day, often without even thinking about it.
And the government gets its slice of the pie in a few ways. There's income tax, which is on the money you make. Sales tax, on the stuff you buy. And yep, even capital gains tax on the money your investments make. Then, a piece of it gets funneled into these big social programs, like Social Security, which is kind of like a forced savings account for retirement, and Medicare, for healthcare when we get older. So that's a big part of the puzzle right there.
All right, so whatever's left over goes into your bank account. But here's where most of us get it wrong. We think of a bank like a giant safe, just holding our cash. But that's not really what's happening. They're actually more like a financial matchmaker. Their whole job is to connect people who have money with people who need money.
And the way they do this has a kind of complicated sounding name. It's called fractional reserve banking. But the idea behind it is super simple. You deposit, say, $1,000. The bank is only required to keep a little bit of that, like $100. The other $900, they lend it out to someone else, maybe to Sarah down the street who wants to buy a car. The whole system, and this is the crazy part, relies on the fact that we're probably not all going to show up and ask for all our money back on the same day.
Okay, so we've talked about the stuff you can see, your paycheck, the bank. Now let's get into the invisible stuff. The unseen rules of the game that are running in the background, shaping your entire financial life. You have to know these. And first up is maybe the most powerful force in all of finance, compound interest. It's a total double-edged sword. It can be your worst nightmare. Think about credit card debt, where that $12 burrito you bought suddenly turns into a $50 regret because interest is piling on top of interest. Or it can be your best friend, like an unpaid employee working around the clock to make your investments grow. It's like a cheat code for your money, as long as it's working for you, not against you.
All right, next concept, your credit score. And let's be clear, this number has nothing to do with how much money you have in the bank. Nope. Think of it as your financial report card. It's a single number that tells lenders one simple thing. How trustworthy are you? If they loan you money, what are the odds they'll actually get it back?
So how is this magic number even calculated? Well, a few things go into it, but the heavyweight champion, the single biggest piece of the pie at 35%, is your payment history. That's it. Just, did you pay your bills on time? It's literally the most important financial habit you can build because it's the foundation for everything else.
And trust me, this score defines your financial world. If your score is low, you're basically a walking red flag. You're going to get hit with sky-high interest rates or just get told no flat out. But a high score? Oh, that changes everything. Suddenly you're sparkling with adult credibility. You get the best loans for a house, for a car, which can literally save you tens of thousands of dollars over your lifetime.
Okay, let's zoom out for a second for a really big idea. What even is money? Seriously, a dollar bill is just a piece of green paper. It has no real value on its own. The only reason it can buy you a latte is because we, as a society, have all agreed that it's worth something. It's just a shared belief, a story we all tell ourselves. It's a system built 100% on trust.
All right, let's zoom out even further, because beyond your own bank account, there are these massive forces at play. Think of it like the economic weather. You can't control if it's going to rain, but you can definitely bring an umbrella. And it's the same with the economy.
And the first weather report we need to check is for inflation. You've felt this. It's that feeling when your $5 still says $5, but suddenly it buys you fewer instant noodles than it did last year. It's like a slow, invisible leak in your wallet, constantly draining the purchasing power of your money.
So what's behind it? Well, it can be a few things.
Sometimes it's a classic case of too much money chasing not enough stuff. You know, everyone has cash and they all want to buy the same new iPhone. Or maybe it gets more expensive to actually make and ship things around the world. And get this, sometimes it's just in our heads. If we all think prices are going to go up, we rush out to buy things now, which, you guessed it, actually drives prices up. A total self-fulfilling prophecy.
This all plays into the fact that the economy moves in cycles. And honestly, the best way to think about it is like a party. You've got the boom, the party's just getting started, everyone's dancing, things are great. Then you hit the peak. It's last call, the lights are starting to flicker. Then comes the bust, or a recession. The lights are on, the music is off, and everyone's kind of shuffling around awkwardly. But after the cleanup comes the reset, and things slowly get back to normal. The key is knowing that recessions happen. They're a normal part of the cycle, not a reason to panic.
Okay, so we've covered a lot. Your paycheck, banks, interest, inflation. So what now? What do you do with all this information? This final part is all about putting this knowledge to work for you. It's about how to use these rules to actually build your future.
And here's the absolute game changer. The single best defense against that inflation we talked about, it's investing. This is where you make the big switch. You stop just trading your time for money and you start trading your money for more money. That's how you get ahead. That's how your wealth grows faster than prices do.
And what can you invest in? Well, there are the big ones. You can buy stocks, which are just tiny little slices of ownership in a company. You can buy bonds, where you're basically loaning money to a government or a big corporation and they pay you interest. You can buy funds, which are like prepackaged baskets of stocks and bonds. Or you can get into real estate, buying property. This is where the rubber meets the road.
But underlying all of this is one final crucial concept: value. Just think about it. Why does a Gucci handbag cost $3,000 while a Target handbag made of basically the same stuff costs $30? It's because we as people have decided it has more value. That's it. It's all about perceived value. And understanding this, what people believe is valuable and why, is the secret sauce to building real wealth.
But please, remember this. None of this is a get-rich-quick thing. It just isn't. Remember that whole compound interest idea? That magic needs time to work. We're not talking about days here. We're talking about decades. Real wealth is built slowly, patiently, and consistently. It's a marathon, not a sprint.
And that brings us to the last and maybe the most important idea of all. You can always earn more money, but you can never earn back your time. It is the one asset you have that is truly finite. So the real question, the one you should walk away with, is this: how are you investing it?